You should probably be sellers on the strength, because the reality is most of the ones on the list that you named are still trading at valuations that don't make sense for their current growth prospects. So off the top of my head, I don't know what the valuations on Palantir and Datadog are, but I do know what it is on Apple. Apple's earnings growth for the next 2 years are expected to be about 3% next year and about 5% the following year. The multiple on something that grows in that range doesn't make sense. Okay, Apple's an amazing company. I'm not saying it should go down a lot, but it doesn't make sense that it should be a huge grower from here. To Steve's point earlier, there's a lot of bifurcation. So you have companies that are trading at 100 times revenues. That doesn't make sense. And what Steve said is just because it traded 100 times before, it's trading at 75 times now, it doesn't make it a buy. And this is where, when we talk about tech, I'm having flashbacks to the 90s right now. And in the 90s, I was one of the people who was totally in and totally gung-ho. And I thought, oh, great, something's down 80% or 50%, now's the time to buy. Like, no, it wasn't. Because just because something's down significantly doesn't mean that today and their future prospects going forward make today's share price the right price to buy in at. So I think we need to be very careful in saying, buy tech. I think this is that year where you need to be a stock picker and you need to go company by company by company. We own AMAT too, for example. We've actually trimmed it a little bit here and a little bit there, and we're just talking about it yesterday, which is, look, this is an amazing company. Growth prospects for the semi space are still fantastic, but the multiple that it trades at today is not what we were paying for it a year ago and 2 years ago. And the growth prospects on AMAT going forward are just not what they were. But we have other companies like Palo Alto and Cisco. Those I think you can buy here because they're not stratospheric. I know everyone's going to pick on me for Intel, but Intel, there's decent growth prospects ahead on that. It's trading at a fraction of a multiple. So I don't think you say buy growth on this comeback. I don't even really know that it is a comeback, but I think you can say sort through, find the companies that are fairly valued with reasonable growth prospects ahead and pick carefully.
Okay. Dr. J, what do you make of all that?
Well, I always agree with picking stocks carefully, Judge. As you know, Pete and I tend to follow momentum, and we're following it not from, the meme stock folks, no offense, guys, but we're following it from institutional-sized trades. So did we start to see that yesterday? Yeah, we did. To Steve's point, we started to see it late Monday, and then it bled over into yesterday for a very nice rally. But and here's the cautionary part of that, too, Judge. The volume was down about 14%, which might not seem like a lot, but when you're doing 42 million contracts and all of a sudden you drop down to 35 million contracts on a big rally day, that's telling you that it was either A, very concentrated, which I believe it was, very concentrated rather than broad, and B, there were a lot of non-believers. Now, if we wanted to continue to play contrarian, we could say, well, those non-believers, that's great, because that means not everybody's on the bus, and we can, see more rallies to come. I'm playing for, some grinding higher, not rallies like yesterday, Scott, but grinding higher. And to me, that'll prove out whether or not we have seen the turn.